Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Bajan, currency analyst, and today is Monday, September 25th, 2017. Today we will look at the dollar yen, the euro dollar, the pound dollar, and the Kiwi dollar pairs. Let's begin with dollar yen, which has been looking rather bullish lately. We can see the 20-day moving average is trending upwards, although in the longer term it's still looking very neutral, slightly tilting to a bearish one with the 200-day moving average gradually trending downwards, and the 50-day moving average already on a slight downtrend. Prices did hit a 2-month high of 112.71 last week. We can see that stochastics, there is a bearish cross there with the percentage D line crossing below the percentage K line. That's pointing to downside risk, although looking at the MACD, it's very much looking very much bullish. The histogram is continuing to rise and is above its red signal line. So if prices were to continue to rise, if the uptrend was to resume, we would see potential resistance coming just below the 113 level, followed by that June high of 114.49. So that would be the July high of 114.49. To the downside, there should be immediate support coming from around 111.71, which is the 61.8% Fibonacci retracement of the down leg from 114.49 to 107.31, followed by the 110.90 level. We do have critical area here at 110.30, which is there seems to be a bullish crossover of the 20-day with the 50-day moving average, and then below that we would have the 110 level acting as another support level. Moving on to the euro dollar, we can see here the formation of a possible double top. If prices manage to close below the 1.1822 level, that could potentially confirm this double top, which would be a bearish signal. We can see that the pair has been losing momentum for some time. RSI, although prices did hit a new 2.5-year high 1.2092 early in September, the RSI has actually been making lower highs and lower lows during that period, and the MACD has also been gradually trending lower and is currently below its red signal line. Prices are currently trading around 1.1877, so it's not too far from that key support level of 1.1822. Break below that, and another significance of that level is the fact that it's where the 50-day moving average is currently converging. Break below that level would open the way towards two other key resistance support levels of 1.1655 and then 1.1386. If we do see a recovery in momentum and prices start to go up, immediate resistance should come from first at 1.1957, then 1.1990, and then from around 1.2030 before targeting that September top of 1.2092. Moving on to pound dollar now, we can see the uptrend is still pretty much intact despite prices consolidating in the past few days. The MACD is looking very bullish, although it could potentially have peaked. We can see that histogram has been fairly even in the past few days, so it remains above the red signal line. RSI has come off overbought levels, but is moving sideways. So there is appear to be loss of momentum in the near term, although in the medium term it's still very much bullish for the time being. The next key resistance levels to watch out for is the psychological 1.37 level, followed by the 1.4055 level. But if in the meantime we do see prices drifting lower, support should come from around 1.3450, which is the current support level, has been acting as support in the past few days. Below that we have 1.3320, and then 1.3250 should act as support before prices would near the 1.31 level. The 1.31 area is kind of critical here. We can see it's around the 61.8% Fibonacci level of that up leg from 1.2773 to 1.3656, and is also where the 50-day moving average is approaching at the moment. And finally, for today's pair, let's look at the Kiwi dollar. We can see prices did manage to make a 1.5 months high, 0.7434 earlier in the months. Prices have come down sharply since then, and it is looking very neutral for the moment for the Kiwi dollar pair. RSI is just at 50 and MACD is also hovering around 0. If prices drop below the August 3-month low of 0.7131, a drop below that 0.7130 level, that would potentially signal the start of a downtrend. So it is important for prices to hold above that level. Immediate support should come from around 0.7230. On the upside, we have the 0.7345 level, which is the 50% Fibonacci retracement of the down leg from 0.7558 to 0.7131. Above that we have the 61.8% Fibonacci at just below the 0.74 handle, and then the 78.6% Fibonacci level at 0.7465 could act as a resistance before prices were to target the July high of 0.7558, which was a 2-year high. That's it from me. Thank you very much for watching and have a great day.